Hello, my name is Davis Taylor, and I'm a Managing Associate Director Accountant in the PCAOB's Division of Enforcement and Investigation. I and my colleague Roosevelt Barros, who is an audit investigator in the division, will be presenting this session on the PCAOB's Division of Enforcement and Investigations. We are required to make the following disclaimer. The views we express are in our official capacity as members of the Division of Enforcement and Investigations, but are our own and do not necessarily reflect the views of the board, board members, or other members of the staff. I'm now going to turn it over to Roosevelt, who is going to give you an overview of the Enforcement Division.
Thank you, Davis. We will start with an overview of enforcement at the PCAOB. It's important to note that when it comes to the PCAOB's jurisdiction, it extends to registered firms and their associated persons who are located outside of the U.S. Registered public accounting firms are accounting firms that have registered with the PCAOB, which is required through the Sarbanes-Oxley Act if they wish to audit U.S. issuers or broker-dealers. An associated person is any individual proprietor, partner, shareholder, principal, accountant, or other professional employee of a public accounting firm that, in connection with the preparation or issuance of any audit report, shares in the profits or receives compensation from that firm, or participates as agent or otherwise on behalf of the firm. There are four main sources of investigations. First, public source analysis. This consists of research of disclosures made by issuers and other types of public information about issuers, such as analyst reports and blogs. The focus of this task is to look for issuers with restatements, adverse audit opinions, and other information that negatively impacted an issuer stock price. Second, tips. As noted by the PCAOB chair, Erica Williams, tips, referrals, and other information from the public are important sources for PCAOB enforcement and inspection staff and help identify violations of law or PCAOB rules. Third, other PCAOB divisions and offices. For example, referrals are often sent to enforcement from the Division of Registration and Inspections, typically as a result of the inspection process. Finally, external referrals. SEC, FINRA, and other regulatory agencies refer conduct or matters to us. The Enforcement Division of the PCAOB includes accountants, attorneys, and support staff, primarily based in Washington, D.C. and New York. We have several roles. Primarily, we identify matters for inquiry and then conduct investigations through their disposition as authorized by the board. We also manage the tips process for the whole organization. We may investigate possible violations by registered accounting firms and their associated persons of the Sarbanes-Oxley Act, the rules of the PCAOB, provisions of U.S. securities laws relating to the issuance of audit reports, and of course, the PCAOB's professional standards, including those relating to ethics, independence, and quality control. It's important to mention that the processes for the Division of Enforcement and Investigations and the Division of Registration and Inspections are different. Therefore, the Division of Enforcement may separately request documents and information previously provided during an inspection. Note that the board may impose appropriate sanctions if violations are found in investigations. For reference, the PCAOB posts all disciplinary orders imposing sanctions on its website. These can be found by going to the PCAOB homepage, selecting the Oversight menu, and then Enforcement. We commonly conduct investigations of both U.S. and non-U.S. registered firms. Most of our investigations involve potential violations of our auditing and quality control, QC, standards, including failures to obtain sufficient appropriate audit evidence, or not exercising due care and professional skepticism, say by ignoring red flags. An audit can have significant audit failures, even though the audited financial statements are not materially misstated, and vice versa. Being a significant foundation area in an audit, independence matters are commonly investigated. Other areas that are subject to investigation are those related to effective operation of a firm's system of quality control, ethics, and failure to cooperate with our inspection, investigation, or other board processes. Davis, turn it over to you.
Thank you, Roosevelt. Now let's take a deeper dive into the enforcement's investigative processes. Most matters typically start as an informal inquiry. The staff can request documents and information from the firm, but cannot compel information at this stage. If a matter involves the use of significant resources by the board, or the party is not complying with our voluntary requests, the staff will request the board to approve and order a formal investigation. The formal order allows enforcement to send an accounting board demand, which can be sent to both firms and associated entities or persons, and allows the staff to compel information. In either of these instances, the firms are notified to preserve all information with respect to the matter. In our fact-finding process, we obtain documents and other information from the firm personnel, issuer, and other sources. The staff reviews documents, which can include audit work papers, emails, draft work papers, file notes, etc., and the volume of those documents can be significant. After we reviewed the audit work papers and other documents, and if we feel we need more information, we can take testimony of associated persons, which is like a deposition. Once we've completed these processes, the staff then reviews the evidentiary record at the conclusion of the fact-finding for evidence of serious violations. If evidence of serious violations exist, we communicate the alleged violations to the firm and relevant firm personnel and allow them the opportunity to respond to the staff's position in writing. The staff reviews those responses and then determines how to proceed. Finally, the staff may close the formal investigation, or the staff will seek settlement with the parties, and if a settlement is reached, recommends a settled order to the board. Otherwise, the staff will recommend to the board to open a litigated proceeding. In a litigated proceeding, hearings, like trials, are conducted by the PCAOB hearing officer to determine whether firms or associated persons committed violations. The hearings are non-public unless all the parties consent to a public hearing. Imposed sanctions can be appealed to the board, the Securities and Exchange Commission, and the federal courts. An appeal can be initiated by both sides, but it's important to note that enforcement's appeal is limited to the board only. We'll now dive into more detail on how DEI conducts formal investigations. In conducting its fact-finding in informal inquiries and formal investigations, the Division of Enforcement will obtain and review all relevant documents, including work papers and their associated indices. Although we may eventually demand production in accordance with our data delivery standards, we may allow, in the initial start of an investigation, for audit work papers to be produced through alternative means, such as in a cloud-hosted environment or on a firm-provided laptop. We also then request for the firm to identify all relevant associated persons and document custodians. We will seek to obtain relevant accounting or auditing literature of the firm in the context of the audit being investigated. And we will seek to obtain emails and other forms of electronic communication if deemed important. Once enforcement obtains and reviews all related audit work papers and information, it then identifies key documents and potential exhibits for use in testimony if needed. It is not uncommon during a formal investigation for the firms or persons being investigated to request for an extension to produce documents and or a request to narrow the scope of their document production. The charging process consists of a few steps. First, a charging call is held with opposing counsel and or the firm or individual to express the Division of Enforcement's views, including the violations expected to be charged. Once the charging call happens, firms and or persons associated with the firms can submit written statements of position to the board. The firms and or associated persons' interests and positions regarding the subject matter of the investigation can be expressed in this statement. This statement is forwarded to the board along with the division's recommendations. Going back to our investigation roadmap, and in particular settlements, please note that a settlement can occur at any time during an investigation, but typically the topic is not raised until near the completion of the formal investigation. However, enforcement may suggest earlier resolution when violations are clearly indicated by the factual record developed. DEI staff can communicate what it views as the alleged violations either verbally or in a letter. When the parties wish to settle, enforcement submits the proposed settlements along with a recommendation outlining the relevant facts and laws to the board. Only if the board accepts the settlement offers are they effective and become public. If the parties are unable to reach a settlement, the board is presented with a request to approve a litigated order. The board then reviews the potential litigated order, and if it is approved, a hearing will be conducted by a PCAOB hearing officer to determine whether firms or associated persons committed violations and should be sanctioned. As we've discussed earlier, decisions made by the hearing officer can be appealed. There are several different types of sanctions that can be opposed by the board. These include civil monetary penalties. And it is important to note here that the Sarbanes-Oxley Act of 2002 requires that monetary funds collected by the PCAOB as a result of enforcement actions be used to fund scholarships for accounting students. The board can also sanction a firm by revocation of its registration, whether temporary or permanent. This means the firm would no longer be able to perform accounting services such as audits for public issuers and broker-dealers during the time of the revocation. In the case of permanent revocation, the firm would no longer be able to perform such services. The board can also suspend or temporarily or permanently bar an individual from being associated with a registered public accounting firm. Please note that when an individual is barred, they cannot be associated with any issuer, broker, or dealer in an accountancy or financial management capacity during the term of any bar or suspension. The board can also limit the activities, functions, or operations of a registered firm or associated person, either temporarily or on a permanent basis. For example, the firm may be limited from performing audit work for new issuer clients while completing imposed remedial actions. In addition, the board may require certain undertakings, such as additional training or updates to policies, procedures, or to the firm's system of quality control. The board may also require appointment of an independent monitor or consultant to verify that remedial activities are occurring according to plan. In these situations, consultants will need to review the remedial work performed by the firms and report back to the PCAOB on status, etc. Finally, the board can impose a censure or any other sanctions that are permitted by PCAOB rules. I now want to take a moment to talk a little bit about extraordinary cooperation. Extraordinary cooperation from firms or associated persons is a factor that the PCAOB considers when determining the outcome of an investigation. Extraordinary cooperation is voluntary and beyond a firm or individual's legal and regulatory obligations. There are three types of cooperation. One is self-reporting. This is related to conduct of the firm or individuals upon learning of violations. A firm or associated person may earn credit for self-reporting by making voluntary, timely, and full disclosure of the facts related to violations before the conduct comes to the attention of the board or another regulator. Another type of cooperation is remedial or corrective actions. These are voluntary, timely, and meaningful actions designed to reduce the likelihood and risk that similar violations will recur, as well as actions to correct the violative conduct that's already occurred. The third type of cooperation is substantial assistance. This includes timely and voluntarily providing information or documents that might not have been discovered absent that cooperation, or that go beyond the information sought by the board staff via accounting board demands and requests, or beyond what is required pursuant to legal and regulatory reporting requirements. Again, though, it is important to note that extraordinary cooperation is only one factor that is considered in determining the appropriate disciplinary response to violative conduct. PCAOB investigations and contested disciplinary proceedings are confidential under the Sarbanes-Oxley Act. As mentioned earlier, imposed sanctions can be appealed to the board, the Securities Exchange Commission, and the federal courts. This confidentiality, however, can be lifted by the consent of all parties. If a respondent petitions for SEC review, any imposed sanction is stayed pending further action by the SEC. SEC review proceedings are generally public, but the Sarbanes-Oxley Act prohibits the board from publicly reporting the sanction unless and until the SEC lifts the stage. I'm now going to turn it over to Roosevelt, who is going to continue to talk a little bit more about our enforcement process.
We will now turn to a discussion about enforcement processes to identify cases and coordinate our work with other regulatory bodies. The PCAOB's coordination with the Securities and Exchange Commission is regular and frequent. There is no formula for when the PCAOB or the SEC will investigate an auditor or an audit firm, but these situations typically fall into the four following categories. Division of labor, where the SEC will investigate the issuer and the PCAOB will investigate its auditor. Parallel cases, where both the PCAOB and the SEC are investigating the auditor. Deferral from the PCAOB to the SEC, where the PCAOB defers its investigations to the SEC, and deferral from the SEC to the PCAOB, where the SEC defers its investigations to the PCAOB. Where authorized to do so, the PCAOB coordinates with foreign regulators in cases involving non-US based audit firms or issuers. For this to occur, there must be a protocol or agreement with the foreign regulator in place. These agreements are helpful in different ways. Let me highlight a few. First, they facilitate evidence gathering, including by minimizing administrative burdens and potential legal or other conflicts that non-US firms may face. They do this by specifying what is permissible to share with the PCAOB per the agreement. Second, strict confidentiality provisions are included. Third, they help to address unique non-US legal requirements. Fourth, they provide a framework for resolving legal conflicts. And lastly, they may result in parallel investigations, which can drive efficiencies. Let us now turn to program outlook and its statistics. The division's current priorities are to investigate 1. significant audit violations presenting risks to investors. 2. Matters that threaten or erode the integrity of the PCAOB's regulatory oversight process. And 3. Matters relating to significant independence violations. However, the division is also focusing on matters that relate to deficiencies in firm quality control policies and procedures. Let's discuss in more detail the focus of the program, specifically on matters involving interference with the PCAOB's process. What are violations that interfere with the PCAOB's process? These are violations of the PCAOB's rules governing registered firms and associated persons' conduct with respect to a PCAOB inspection or investigation. An example is non-cooperation matters, which are a high priority for the Division of Enforcement. Non-cooperation matters involve providing improperly altered audit documentation to the PCAOB in its inspections or enforcement processes. These matters can be pursued in isolation or in conjunction with others. Let's now talk about matters involving failure to cooperate with inspections and/or investigations, as well as those involving the improper alteration of audit documentation. The board has issued various orders related to these issues over the years. As a result of an increase in these types of matters, in April 2016, PCAOB staff released Staff Audit Practice Alert number 14, titled Improper Alteration of Audit Documentation, which includes examples of non-cooperation and sanction types. As of May 31st, 2024, the board has issued settled orders involving non-cooperation of approximately 25 firms and approximately 80 associated persons. Since at least 2019, the Division of Enforcement has been specifically focusing on matters relating to deficiencies in firms' quality control policies and procedures. Firms have responsibilities to ensure compliance of its personnel with professional standards. A proper system of quality control provides firms with reasonable assurance that they will. During 2024 through February 2025, the board issued over 40 settled orders that involved violations of quality control standards, involving both U.S. and non-U.S. firms. They included quality control issues around all 5 of the elements of quality control, which are 1. Independence, integrity, and objectivity. 2. Personnel management. 3. Acceptance and continuance of clients and engagements. 4. Engagement performance. And 5. Monitoring. We plan to highlight one of these settled matters with QC violations today. I will now turn it over to Davis.
I'm going to now talk about a couple of settled matters that involve international or non-US based firms. The first of which is one that was recently settled, and it involved an audit firm known as Shandong Haoxing, which is a China-based firm. And they improperly relied on predecessor auditors' work, issuing their unqualified audit opinion only one day after the firm entered into an engagement agreement with the issuer. The firm and several of its partners further violated independence requirements by telling the issuer that they expected to issue an unqualified audit opinion before the firm Haoxing had actually been engaged by the issuer. The firm and its chief partner also did not cooperate with the investigation by providing misleading information about the audit personnel involved in the audits. Other violations included audit documentation failures, such as indicating work had been done by individuals who were not involved in the engagement. As a result, the firm was sanctioned with immediate practice limitations, including not being able to accept new issuer clients. The firm was also required to take on an independent monitor to assist to assist in ensuring compliance with the firm's undertakings to improve its practices and its system of quality control. Certain partners and staff were barred from being associated persons of a registered firm at varying lengths until a right to petition to have that bar lifted. Civil monetary penalties of 750,000 US dollars were assessed to the firm and lesser amounts to individuals, and certain additional continuing professional education requirements for some individuals were imposed. Now let me discuss the matters of Comodromo CPA and PricewaterhouseCoopers Auditing Company SA, also known as PwC Greece. These matters related to Nikos George Komodromos and PwC Greece engagement teams' failures to respond to inconsistent audit evidence uncovered during the audit of the 2016 financial statements of Aegean Marine Petroleum Networks, Inc. After encountering evidence that raised concerns about unusual transactions with 4 customers that made up 13% of Aegean's reported revenue, with the related accounts receivable making up 11% of total assets, the engagement team sought additional audit evidence. These additional procedures uncovered significant inconsistent audit evidence that Komodromos and the engagement team failed to respond to with due professional care and appropriate skepticism, allowing PwC Greece to issue an unqualified opinion without resolving those inconsistencies. The engagement team further violated audit documentation standards when they did not document those additional procedures in their audit work papers. As a result of these issues, the sanctions for these matters included civil monetary penalties of 3 million US dollars, which were imposed on PwC Greece, and 80,000 US dollars on Komodromos. Komodromos was barred from being an associated person of a registered public accounting firm with the right to petition for termination after 2 years. And PwC Greece was required to complete remedial undertakings such as pre-issuance reviews and additional training. I'm now going to turn it over to Roosevelt, who will talk about another matter and then wrap up this presentation.
Halperin, the firm's owner and sole partner. This settled disciplinary order sanctioned the firm for violations of PCAOB rules and standards in connection with 5 audits of 3 issuer clients, as well as violations of quality control standards. The firm's owner and only partner directly and substantially contributed to the firm's violations and also violated PCAOB rules and standards on those audits, including failing to 1. Obtain engagement quality reviews, 2. Obtain sufficient appropriate audit evidence in auditing the valuation of significant accounts, 3. Failing to make required audit committee communications, 4. Failing to assemble a complete set of audit documentation, and 5. Failing to timely file Form 2s and Form APs. The sanctions for this matter included a $200,000 civil money penalty, the revocation of the firm's registration with the right to reapply after 3 years, and a bar for the partner with the right to petition the board to terminate her bar after 3 years. We have covered several topics during this presentation, and as such, we would like to leave you with a few key takeaways. 1. Inquiries and investigations can come from multiple sources. 2. The Division of Enforcement and Investigations processes are separate from those of the Division of Registration and Inspections. 3. Investigation of both U.S. and non-U.S. registered firms are conducted. 4. The investigation process has 4 main phases, which are, first, informal inquiry, second, formal investigation, third, fact-finding, and fourth, closure, settlement, or disciplinary action. 5. A variety of sanctions can be levied. And lastly, all public disciplinary orders can be found on the PCAOB website. Thank you.